guys? JJ Fade 23. Hope you guys are having a good weekend. I'm going to teach you guys today how to short pretty much any stock, but mostly small caps, and how to stay safe. A lot of people say, oh, JJ, how did you short that there and not get smoked? Like, how do you know? Like, oh, well, guys, I'm going to teach you something right now. This is how you short stocks without getting smoked. All right? I call it a backside fib bounce. All right? Now, guys, I don't just make this stuff up, just so you know. Now, and the power of risk reward is a funny thing. So look at this, all right? We back tested about 121 stocks last year. I mean, I think we did this about 2 months ago for the whole part, from January to I forget what date it was. So the total R return on the 61 fib bounce was 126. Total R return on the 78 fib bounce is 97. Look at the win rate. Not very good at all. Not the best win rates in the world, but the risk reward is insane, and it's always an end of day cover. All right, so you're shorting, and when the setup comes, you short and you cover at end of day. You either get stopped out or you cover at end of day. I've never shared with this anyone except for in my room, so I'm going to show you some examples. Basically, guys, it's the stock setup is stocks that ran at least over 50%. They have a market cap of less than 300 million, and it's $1.50 to $10. A free market volume of over 1 million, and a float of over 1 million. Yeah. So, guys, basically, this is what you want to see. All right. So the stock's running. Usually, it's not right off the open because you need the lower high. So I'm going to show you a few examples, like WW. All right. So the stock's been running. I don't care if it's 1 day, 2 days, whatever. First day, as you see it. All right. Let me turn this pre-market on. Now, guys, first thing you want to see is a stock that comes into a daily level. All right. So it has to top out. See how we have a lot of resistance right here? So we don't want to short it until the resistance. All right. So we're coming up into the resistance now. Now, a lot of traders on something like that will just try to short up here, and a lot of times it breaks right through it or whatever. You get smoked, right? So what I do is I wait for the volume, okay? I want to see the volume of the run-up, all right? So let's say if this is the run-up, I'm looking for it to top out here. I'm looking at the volume here. See, all this run-up here is about 3 million. Now, I want to see it top out and pull back from there, enough that it could possibly be the top. And then I'm looking for the volume on the spike over here to be 50% or less. All right, so if we have right here is about 3 million, we want this to be less than 1.5 over here. All right, so this is all the way down to the initial spike was a lot, but then look how fast the volume goes down to 1 million. So the volume is 50% reducted from here to here. All right, now you guys put your fibs on. You know you topped out at a level. You've sold off. You broke some support levels. You've made some lower lows. The volume's reduced by 50% at minimum. And now you're going to put your fibs on from the swing high to the swing low. And you're going to either short the 61 fib or the 78% fib with your stop just above high a day. And you're going to cover at end of day. So for an example here. Now, guys, something to take note. Look, if you short at the 61 fib, you would have had 66 trades. If you wait for the 78% fib, you would have had only 48 trades. And a lower win rate, and you wouldn't make as many R's. So the 61 fib, even though the risk is bigger, the reward is better. So it's because there's more trades, and also, oh guys, by the way, here's the thing right here. Here's your criteria. So basically, right, you have more. So you just have your order sitting here. You see the setup coming. You topped out at a resistance level. The volume's cut in half. You just have your order sitting here with your stop just above here. You get filled. It would basically look like this. This trade would be, you got filled right here. Your stop would go just above the highs. Now that would be, you cover at the end of the day. So a trade like this, let me take these off so you can see. 1, 2, about almost 2.5 to 3 hour right there. All right. That's a simple trade that, and I'm going to show you a few examples, that's all you do on backside trades. Instead of trying to catch the top and getting smoked when the volume's spilling off the handles, 3 million, 2 million, 3 million flying, obviously, yeah, you can say, hey, I'm going to trade a trend break if we break trend at this key level, whatever. But this is the easy backside trade that I'm trying to teach you. AMBO. And if anyone wants this spreadsheet, hit me up and I'll go through it with you. I'll send it to you. I don't really care. All right, so let me set this pre-market data off on this one. Actually, I don't know if AMBO actually set up, but anyways, look. So guys, I don't know if this actually hit the fib. I'll try to find some good examples. I don't think this came up high enough. No, that one didn't come up high enough. But see how right here, look at how much volume we have on this run up. Now guys, let me see. Now I'd want to look to the daily chart to see if we rejected a level, all right? I'd say, hey, do we have pivots or resistance? There's a pivot right here. Pivot right here. So we have some pivots. Obviously, there's a lot higher too. But basically, when I say resistance, guys, I'm talking about clear pivots that everyone can see. All right, this is a mess on these charts. Guys, I don't usually when I'm doing my videos, I don't go ahead of time and try to find the best setups because I feel like that's just anyone can do that. So I just try to go through some charts of stocks that I remember recently. So bear with me. But I like to mark my pivots like this. The clearest pivots that everyone can see. Ultimate high pivot, ultimate high pivot, ultimate high pivot. Right? This is a pivot. That's a pivot. But we do have a pivot here. So we came real close to that pivot right there. Real close to that pivot, and we rejected. The only problem is this one, obviously the volume got cut way down on this bounce right here. But I would have wanted this to reject up here and this volume to go now. The volume is way lower, 50%. Reduced on this bounce right here, backside, possible backside bounce, right? The volume is way down. So what I would have wanted to see was first we rejected the daily level. Now you put your fibs on. We want to see the volume be cut in half, and we would have wanted to be short right here. All right? We would have shorted right there with a stop above and covered at the end of the day. So let's go try to find some other. I know I traded a good one on SRK. SRRK was, all right, so here we go, right? First things first. Look, we have resistance up here. See this? Very big resistance up here. First time retesting it again. So we came right up to that resistance, all right? Now, we came up, we rejected the resistance, we sold off a bit. Now, look at the volume on this run-up. All the way up to almost 2 million. Even a little right there. 73, but that's the top. I like to look at the run-up volume, how high the run-up volume got. And then once I see it topped out, it dropped a decent amount from there, I'm going to put my fibs on, and I'm going to see if the bounce to the 61 fib is on 50% less volume. All right? Now look at this, guys. Look at this volume right here. It's almost non-existent. This should fail. So we're comparing here, the run-up volume, how much demand there was, to now, look at that, way down here. I have my order sitting here, 33.20. I get filled. I'm risking just above here. All right? And then I'm covering at the end of the day unless I want to swing it. Something like this, guys. When you have something like this, look. When you're this far, if you're taking the short up here, 33.20, and you have that much room back to the daily 4, yeah, you can swing that. Because stocks come off the 4, they come back to it. Remember, they come off the 4, they come back to it. Every stock, I don't care what stock, comes off the 4, comes back to it. The 4 is the baby blue line, you guys. Look. Go, go, go. Comes off, it comes back to it. Comes off, it comes back to it. Comes off, it comes back to it. You can look at every chart, every stock on earth. It doesn't matter. They can't stay off the 4 for more than 1 or 2 days unless they're some kind of insane freak stock, which happens once every 6 months maybe. For the most part, I don't care what stock you look at. You can go to any freaking chart. I don't care what it is. Look, comes off the 4, comes back to it. Comes off the 4, comes back to it. Comes off the 4, comes back to it. Off the 4, comes back to it. Off the 4, comes back to it. You can look at any chart. It doesn't matter. The only ones that sometimes stay off the 4 longer is big earnings gap ups or something. They might flag before it, but for the most part, within that day or the next day, it comes back to it. Comes back to it, comes back to it. So anyway, SRK, if you have that much room back to the daily 4, you can swing your short back to there. So remember, daily resistance, check. Now, volume decrease 50%, check. Fibs on. We make sure the volume the stock's running up here towards our fib is 50% or more less than the run-up volume. Check. Short. There was another one that wasn't that far ago. I think it was WHLR maybe. All right. Yeah, so here we go. All right, let me delete this. WHLR. All right. So, guys, $19. Let's go look. This is one of those freaking crazy beat down shots. So, guys, this is a pivot right here. Didn't come quite close to it. You know, sometimes judging on the thing, but also, guys, sometimes I'll go like this too. Put my fibs on this way and see if it comes to a 50 fib or a 61 fib again. So, see how we have the 50 fib there? Plus, we're in like the middle of all this consolidation. And we have this like weird trend line here. So, that's like a reason now, right? We have a trend line and a 50 fib at the same spot. Now, look. And now, I'm not trying to catch the top, you guys. Because if I try to catch the top, right? Maybe that's not. Maybe it blows right through. But now, look. We see this reject here, all right? It rejects big time. That was on not that much volume, but look, still 60,000. Now what? Now I know we rejected a key daily level and a trend line and fib level, so I put my fibs on here. Now I want to look on this spike right here. Look at how low the volume is now. The volume's down to 15,000, you guys. Is that a 50% volume reduction? Yes, it is. All right? So now I'm waiting. Now, guys, you want to make sure you have room to the downside, which we did here, because we ran a decent amount. You get filled right here, and then again, this one you can have you stop up here, either cover at the end of day or hold it for a swing if you have room back to the 4. In this case, again, look, guys, if you were shorting up here, you had a decent amount. No, that was this one, sorry. You had still, though, you shorting up there, you had about down to like, look, see, down to like 11, around $13 was the 4. All right. So yeah, if you're shorting right there, you can hold it back to the 4. If you cover before the 4, you're covering too early. So you shorted there, cover some, maybe you swing the rest, cover into the 4 and 8. These plotted lines show me on smaller time frames where the daily 4 and 8 is. So that's why I have them on there, because I love those. And now, guys, this one actually did the same setup again, really. If you go like this, I wouldn't have traded after this big dump down to here, but look, you put your fibs on from here, from the swing high to the swing low, and now what? The problem is why you can't take these ones that drop this far is because the fibs get so stretched out that you have too much risk, all right? This drops so far that even if it goes back to the 61 fib, you can't risk $14.65. You're not going to risk $4 to get, what, maybe fucking $6? That's backwards risk reward, all right? So the point is, guys, this setup keeps you safe on stocks that have been going crazy. Like, you know, sometimes when I see a reverse split that's running, or a recent IPO, or even a China stock, you know what my plan is in the morning? I say, guess what, guys? I don't trade reverse splits, China stocks, or recent IPOs. So the only possible way I will trade that is if it blows all the other shorts out in the world and then runs for a mile, smokes every short, then hits resistance, then starts to drop, and then slowly crawls back up on half the volume into the low high position. And then that's the only way I'll trade it, because that keeps me dead safe. I know exactly where my stop has to go. I won't go on tilt chasing up the front side, and I will literally just, it'll be perfect. We almost had the biggest trade in the room on TIL, but I was trying to be too perfect with my entry. As you can see, I have it marked everywhere because I was trying to be too perfect. But look at this. Guys, look at the volume. You can use this on the daily chart too, all right? Look at the volume on this run-up. Guys, what I call this right here, this is a huge run-up into some really nice gap fill right here. You had a gap fill right here. Gap close, gap fill, whatever. Usually I call gap close, meaning it closed the gap, but gap fill will be actually to the closing price. So gap fill and gap close all the way to the closing price. But this is usually where they stop at the levels where it fills it on the chart. So yes, we ran up to a gap fill price. Guys, on massive volume, and now you notice something about this chart? Whenever a stock spikes like crazy like this, guys, it's so much easier for it to come back down because it makes no support levels all the way up, right? This is called easy up, easy down. Just like this is called easy down, easy up. So that's why when a stock like this starts running, there's no resistance at all right here for it to go. There's no resistance to stop it. it fell straight down so fast that it can go back up just as fast, and now it can come back down just as fast because both these times it didn't make any high volume areas to like help. Look at this, whoop, comes down just as easy because it had no high volume areas to stop it. There wasn't any consolidation levels to hold it. So now, as you can see, I still have my circle here waiting for the trade. Right? Because if you take this setup to the daily chart, after I saw it top out at that gap fill, I simply put my fibs on here and I say, okay, is the volume 50% reduced on this bounce? Look at this, guys. It went from 4 million down to friggin' 1 million on this bounce right here. I was praying to get filled right here. Praying because I knew once this starts to dump, it's going all the way back down to where it came from. And I never got filled, and I was like, fuck. Then I was saying, okay, let's just watch the hourly chart and get filled on this trend break. Or I was almost going to take the short right here and just jam my stop down a little. And then I'm like, fuck. And then I missed the entry, and then it started to break down, and I missed the entry. And then I just was waiting too many times to get a perfect entry so I could jam my stop down, and I blew it. But, guys, it's the same setup. If you got filled right here, boop, 77, 87, risking $15. Guess what? This trade would have been a monster trade. You got filled right there. Your stop goes at the highs. You got 1, 2, 3 hours almost, and maybe more. And now, guys, I teach people in the room how to take better setups where you don't have to risk off the highs. Usually when you're taking a low high, the safest place, guys, in any setup, the safest place to risk is the last true place that it failed. If you try to risk somewhere between here and here, it's not the true place that it failed. This is the true place that it failed. That's where your stop should go. But if you know what you're doing and you get a good trigger at a key level, you can put your stop above the next resistance or above the next fib to try to jam it down. So, for example, what I could have done on here, I see that it topped out to 50 fib. Maybe I just put a trend line on it right here. And if we break this trend line, I short with my stop above here. That way, and something like that. This is for more when you're profitable and doing good, and you're not going to be worried about losing so much. As when you're trying to build confidence and you're trying to build your account, it's better to use the setups exactly how they're made. But something like this, guys, you could have shorted right here at the trend break, and you would have put your stop. Say you short at the trend break, you put your stop above the resistance right there, just above that little resistance right there. You already have 1, 2, 3, 4, 5, 6, 7 hours on that trade. And if this keeps coming down, this is the first big bounce. Well, the first any bounce that it had. I wouldn't expect this thing to be able to bounce very far. At most, maybe back to 50 before it comes back down all the way down to here. So I don't think that thing's going to, it has to retrace a little bit, but it's dropped a lot to short it now. But I mean, on the daily EMAs, if we bounced hard and fast back up to the 8 and 21, or close to here, I would probably still take it short and have a decent risk reward. It's not the setup that I'm talking about, but I still think this thing's ultimately going to come all the way back down, one way or the other. So I'm still watching it. I don't really like this fake breakdown of this bear flag. That's reverse pressure. So whenever I'm looking for a stock I want to short, I don't want to see stuff like this before, because this actually traps shorts right here. If it traps shorts, it's going to make my short not as good. Now, if it just did a regular bear flag and broke down, I probably would have missed it. If it didn't do this little wick right here, if it just did a little wedge and started going up, or it just came like down and bounced quickly up, that's the best way. If it just comes down, bounce quickly back up short, and then take it lower. I'm still watching to see what happens up here, but it's not as good. That better setup, obviously, is the volume reduction with the lower high 61 to 78% fib bounce. Amazing, amazing, amazing. Keep you out of trouble every time. So like I said, guys, just go over, like, if you want to, these are all these stocks right here. You can go back and look at the dates. Pause this if you want and go back and look and see what I'm talking about. Go back to the dates and the stocks and look for the entry price. This is how you backtest, guys. This is how you actually figure out if your setup's working or not just randomly trading every day, all right? So, you got to backtest and have confidence in your setup so you know. You know what else? You know what happens, guys, if you don't backtest? What happens is you go like this. You take this fib bounce right here, and then you cover right here. You take it at 80, you cover at 75, and you go, fuck. You need to know what entry and what exit is going to give you the best results, which to me, in all the setups we trade in small caps, I've still never found a better exit than end of day. Yes, you're going to lose more trades, guys. Obviously, if you're taking trades like this, all right. Let me show you an example. All right. Obviously, if you're taking a short and you're covering fast, you're going to have a high win rate. But guys, the ones that totally unwind give you so many R's, I'd rather get stopped out a little bit more and have the huge trades. You know, I mean, some of these guys, they they usually like end of day is usually the best place. You know, it's like well, TWG was the Chinese stock from the other day, crazy stock. This was actually, guys, this is why I try to stay away from China stocks. Well, number one. All right, I'm going to show you why I wouldn't have taken this trade regardless. And a lot of people might get confused about this. This is the experience in trading. Number one, it's Chinese, so I would expect it to play more games than a regular stock. But guys, look at this. I already know. Look at this. Do you see this right here? This is a breakout of the 550 level, okay? Now, I want to show you something. Why I would not take the lower high on this, okay? Number one, everybody knows I love the 10-minute EMAs. All right, so this stock topped out. First of all, it didn't top out at any resistance because it had no resistance. That's number one. It has no resistance over 540. That's number one where the setup isn't valid. All right. But number two, when a stock comes down like this, right, and the volume going up is, look, up here, 9.4. Well, we'll go to the 1 minute chart so I can show you guys. All right. The volume going up, 1.6, right, 1.1. Now, when you see this, guys, a breakdown of the breakout level and then a reclaim, that's a long trigger. This is a fake breakdown and reclaim of a breakout level. You don't short a lower high bounce after you just got a fake breakdown and reclaim of a daily breakout level. Because now what we do, we topped out at no resistance first of all, then we came back and held the breakout level, and now we're just grinding higher. So you have to think differently about that. You don't want to short a lower high after you shorted a fake break, after you got a fake breakdown. So maybe you're only going to short it if you get a stuff trigger or a fake breakout at the highs again. Okay, well, this gave you a nice fake breakout, but it's too close to the end of the day. So now we'll see what happens. You know, if the stock sells off a lot and then doesn't drop too far, look, we have a lot of room back to the daily 4. The daily 4 is way down here. All right, so if this thing's going to be done, whether it's done or not, I'll just patiently wait. I'll mark this so I know the 4 is. I'll just patiently wait for this thing to go like this. All right? I'm just going to patiently wait for this to drop again and sell off, and then the volume get really light, and then it slowly comes back up, as long as it doesn't come too close to the 4. If it comes down here and starts to die, let's say we gap down. We are gapping down probably for tomorrow, but say we gap down and then we start to push back up here on low volume. I will maybe not take it because we didn't have any real daily levels here, but I will see how it looks. And also, it's Chinese too, so I recommend you only trade the very, very, very best lower high setups on China stocks, meaning it definitely ran into resistance, meaning it didn't do a fake breakdown or anything. It has a lot of room to go down, and it popped back up on low volume in the right time of day, not near the end of day. So you want to be before 3 o'clock on any trade, or else you don't have enough time, guys. If you take a trade after 3 o'clock, how do you have enough time to get your reward back, right? Let's say you short this fake breakout, boom, 820, you're risking 40 cents. I mean, yeah, they drop a lot fast sometimes, but you don't have all day to get that huge return, so there's no point. All right? Don't be a degenerate. So go ahead, take those, study them, go look at low high setups on 50% volume reduction after a good daily level rejection. And that will save you from getting smoked on the front side. All right. Thanks, guys. By the way, I'm not a financial advisor. I just like talking shop. Later.